This meeting is being live streamed. Is this pink a little too bold and distracting?
Yeah. A little bit too bold and distracting.
Right, I'll change it because it's bold and distracting.
I agree.
Right, what do you think? Green or purple or blue?
Blue, purple.
Blue, purple? Right. So am I the host or are you the host?
Well, it's a Twitch stream, so it doesn't matter if we just like cold open it, just roll right into it. We're here for the clips, bro. That's what we're here for.
All right, well, let me know when we're recording and I'll take this pen out of my nose.
I'm gonna make sure the audio's good.
You also upload your stream to YouTube?
If I get good clips, yeah.
It
The
doesn't
ones
stay
I've
on.
done over the last couple of days, I haven't because I've barely said anything. I've just been listening to Gareth and going over chart stuff. And I'm trying to get because every morning I try to put out some content I'm trying to write some trades that I see, some things that I see on actually, I might go over a couple of them on Sunday when we do our stream. But just like I make cases for certain.
Wait, we're doing a stream on Sunday?
Yeah, I asked you. I said Sunday night.
Oh, Sunday night.
Okay. Let's do the weekly stream.
Yeah,
if you're
that's
free.
good.
If not, don't worry about it.
Yeah, I'm free Sunday night. Having some visitors coming over for barbecue, but during the day.
Okay. All right, Peter, it's been a wild ride, really delving in and using my scripts for trading. It's been useful. I've used thousands of scripts now on TradingView. Just thousands of them.
Are there thousands of scripts on TradingView?
Oh, yes. And there are many of them that are just terrible, just god-awful. But there is a particular one, these LuxAlgo scripts that I think are the most popular scripts that there are.
Oh, yeah,
like these are TradingView scripts that surface information that help people trade. Want to get in, out of a trade, what to expect for price movement and that sort of thing.
Next gen stock, crypto, and Forex. Is that what it said?
Exactly.
Indicators.
That's right.
Really nice website. I think if you have a website that looks this good, there's no way that your script isn't the best script in the world.
I don't know. Have you seen the sacredprofit.com website? It has a pyramid with an eclipse on top of it. So it has all the power of the pyramidal structure, but all the panache and wisdom of the eclipse. As we learned from the television show Heroes, eclipses are things that happen when you're becoming more of yourself, when you're developing a superpower. And a pyramid is also like this historical information, long wisdom long forgotten. LuxAlgo, I think they have like animations of like computer stuff.
You throwing shade at LuxAlgo?
I'm just saying it's not esoteric.
What I'm
it's
thinking
not exoteric
is,
when you really look at it either.
The way I feel about it is, someone pulls up in a Lamborghini. You got to ask yourself some questions. What are they compensating for? Why does your website have to look better than Apple's website?
Excuse me, you're saying that the LuxAlgo website is a Lamborghini?
I'm saying why, when I see a website that's so overkill fancy, I get sus. Just me.
To me, it's a DeLorean. I'll give it a DeLorean status. That's as far as I'll go. Whereas my website is more like I don't know, like a Lamborghini. I'd say. I don't know. That's just what came to mind.
Just what popped in. All right. So, sounds like we're setting ourselves up for a competition between LuxAlgo and your script. What's your script called? Sacred Profit?
Well, the bundle is called Cycles.
Cycles. That's right. That's
Sacred
what.
Profit is me. I'm the one who created it. Because Cycles. Profit is sacred and should only be earned sacredly.
I got to tell you, I really like how feminine Cycles sounds like. It really conjures some very feminine
Wait, how do you
energies.
kick out somebody from the session?
LuxAlgo sounds like an AI, but Cycles sounds like a book about how to deal with your feelings at various times of the month. You know,
Wait, okay. I mean, I was thinking more of like the Mayan calendar, all of history is being contained within this, a very time wave zero, very I Ching sort of situation. But menstrual cycles, I'll take it.
I never
Take it.
said it mental. I've never used that word.
Well, it's sort of like Lux Algo sounds like someone who wanted to. I'm not throwing any shade. I'm just saying that it's a stupid name. And it sounds like someone who was like going through all the domain names that they could find, and it was all taken. And they decided I'm going to put luxury and algorithm together. If AI was around, they would call it Lux AI. Hell, I wouldn't be surprised if luxai.com is taken right now. Let's take a look.
Let's take it out. Let's take a look.
Of course it is. You know what? I don't have to check. I'm sure it's owned by the same
What do
people.
you mean?
I'm not even checking.
Lux AI is it's not taken.
Wait, Lux.ai. I didn't even check that one. Lux.ai.
Domains that were sold at auction. You can renew this domain at auctions.whois.ai.
Okay, well, if they own it now, then they will in the future. I think they don't own it because it costs like $150 a year for a .ai extension. And I don't think they can afford it. Lux Algo's not doing very well. They're on the ropes. Cycle's coming up. Cycle's eating their lunch. Okay. So I thought it might be a good idea to just walk you through a little bit of how someone might use LuxAlgo, some of the more popular LuxAlgo scripts, because they have tons. They have so many. I don't know why they have so many. It's like, if they're good, why do you need like 150 of them? But okay, whatever. Some of their more interesting ones, some of the more popular ones. I figured let's go through them, and then let's compare and contrast with cycles, and see like if you were going to be a trader, if you're going to be a day trader, like which one would you like to use? Some I think are not worth what cycles is worth, and other things I think are they're great companion scripts with LuxAlgo and cycles together. So you'll let me know. And
Full
since you
disclosure,
are a total layman,
I was just about to say that. I'm not a trainer at all.
exactly. So if you're able to pick up on it, then I think it'll be good. Oh, actually, we'll do a little game here to be like, would Peter take this trade or not, and see what your success rate would be. I mean,
All
we're not
right.
going to calculate it because I don't really care that much about it, but sort of like a straw poll type situation.
Look, my opinion is that trading is just gambling, and it's just like the people in casinos going, I have a strategy, but let's go. All right. As long as get 50-50, I'm going to be on par with all you freaks.
So this is, let's go with Bitcoin.
And by freaks, I mean beautiful human beings who I value and respect and should continue watching the show, because in no way should you take what I said as I'm a comedian. All right. And so sometimes I throw things out there. I don't really mean it. Like the other day, I told my daughter I love her just out of the blue, just popped out. It's just one of those things I said for a laugh.
You got to know your audience, man. Laps that stuff up.
She took it way too literal. It's kind of an awkward situation now. Now she hugs me and I'm like, gonna have to fix that. All right, what are we looking at? Bitcoin.
So this is Bitcoin. Take a look at the Bitcoin perpetual futures contract. Don't worry about what all that means, Peter. All that means is that you can trade Bitcoin. All right, just consider this to be Bitcoin, and it is the what is this from today all the way back to, let's call it, the middle of last month. Just this period of time. We'll zoom in, zoom out, but this is the period of time we're going to be dealing with. So one of the one of the most popular indicators for LuxAlgo is the support and resistance levels with breaks. This is super straightforward. It just finds peaks and valleys, peaks and troughs, and then draws a line, a level, and then alerts you when the price breaks that level.
Wait, is this LuxAlgo? Is this your script? Because it looks
This is LuxAlgo.
okay. I was like, you took a step back here. Okay, I got it. All right. Oh, already,
So like,
already. This is okay. Go ahead.
so like over here you have this line here, and then, sorry, not that one. You have this line over here, and then when it breaks, it says, oh, that's bullish. So then it gives you a bullish signal. Easy enough to understand.
Right.
Um, what would you say is the problem here? If you could take a look at this, what's the main issue?
Ooh, the main issue. Well, I don't see many of those bullish. Well, no, I see a couple of them. The main issue is I don't know. I don't know if well trading to tell you.
Sure. So if you were to take these trades, let's say you're going to take this guy. Let's say we're going to go back in time and see what this trade would have looked like. So you come over here. We're going to go to the couple candles before. This is the signal. The concept of trading is that you're trying to buy low and sell high, and sell high and buy low. Just so you know
Right.
that.
Right. Yes, I got that part. Which
So we move
apparently
forward.
is very hard to do.
Right. So we move forward here, and the candle breaks.
Buy.
Shows a buy signal.
Wait, it's too late to buy at this point.
Exactly. That's the problem. The problem is that, I mean, it might not be too late. It might run, but the problem is by the time the signal fires, half the move is done already.
Right.
Then
Wow.
move forward, you're like, oh yeah, it would have gone up. Yeah, no problem. It would have gone up some more. It came back almost all the way down to the break. And you could have written it up. And of course, this would have been a nice trade if you place your stop right underneath here, right underneath this candle, and you roll it up. Great trade. But it happens. You're notified as soon as the break occurs. Same thing over here. You take a look at this break over here. What do we see? We see that the B shows up, and the candle is already it's already giant.
Wow.
It's
What's the time frame of this?
we're on the 15-minute time frame right now.
Oh, really? Jeez, so that's fast.
So this is a drop of, let's say, 1.37%, which is pretty significant. If you're using 10x leverage on Bitcoin, that you can make 10%. If you were at the top over here and sold if you sold at the top and bought back at the bottom, you can make 10%. If you're doing 100x leverage, 100%. So there's some money that could be made on a move like this, but you already know the move as it's already happening, and you could have just as easily have gotten filled anywhere inside of this candle, right? So it's like it's a coincident indicator. It's letting you know what's happening right that second, but it can be problematic if you're really trying to catch it. Again, here we have the same issue. The B happens as it breaks. Here it happens the move is already halfway done. And so on and so forth. Here it breaks, and you don't really have any indication of how long, how far down the price should go.
Right.
Let's try here to add.
Is this the best script? I don't get it. Is this the?
This is one of the most downloaded LuxAlgo scripts, probably because it's one of the oldest ones, but it's one of the most downloaded ones. Yeah. But it also just gives you this idea, like this sort of trading strategy. People have asked me to code again and again. They go, when the price breaks a previous high, code the strategy to buy, and vice versa. Like people ask for this sort of thing all the time.
You should just make this script then.
I do. I mean, I get paid to make scripts like this, no problem. And some people add like little bells and whistles to make it a little bit more more suitable to their trading strategy. But this is the idea. But let's say we add currents to this. Currents, if you remember, is the part of the cycles bundle that shows the types of moving averages. That gives you an idea of where buyers and sellers might be congregating. So you see here that we're riding this wave, right? Right now, the price is really.
So these lines here are moving averages, seasonal moving averages.
All kinds. They are right now on the screen. We're seeing the monthly moving average, weekly, daily, shift, period, episode, segment. And as you go up this list, the faster the moving average. But this yellow one over here is the weekly. This orange one is the daily, and this purple one is the shift. So what you want to be doing is that it's a little bit messy here to see. It's nothing we can really do about that. But the idea here is that what you want to be doing is taking the further once you're oscillating around one of the currents, and you see all three of these currents are sort of together, right? They're sort of like in this narrow band. So the chances are that we're going to be oscillating around those currents for a while until something significant changes in the trend. We're going to be around this level for a while. So you want to be looking for breaks at the top when you're extended above the line, expecting that you're going to mean revert coming back down to the average. And then you, when you're below it, you want to look for longs. So any of these breaks that are sort of like right around the currents, you sort of want to ignore, right? Because even though they could break up or break down, you sort of want to catch the ride back down to the average.
Why do you want to catch the ride back down? Why not catch it up?
Well, because you don't necessarily know how high it might go up, but you have an idea of how far it might go down.
So you short it here?
So you can short here, exactly. But like I said, the issue with these things is like this break is I really don't like these types of scripts because there's so many different levels to look at, and you're like, okay, well, which break should I actually be following? As far as I'm concerned, as long as the price is oscillating around the currents, I might not choose to trade this. Like I would look for something like this where the price breaks out and then look for a short when I'm above this line, or look for a long, like when this one broke and fell down. You see how when we saw it before, it was a straight line down. Well, I wouldn't try to catch this trade on this break. What I would look for is wait for this break to happen. It's notifying me that some big break is occurring. It falls, and when it bounces around here, I would go long. I would go long and expect it to come back up to the currents, which is exactly what it did. Because this guy, like I said, if you catch this break, if you short as this is happening, you could be filled anywhere in here. But once it bounces back up like this, let's say this candle opens up green, then you might look for a long to catch this trade back up. So at the, let's say, close of that candle to catch this right up, which is 1.26%. Over here, as long as the price was riding up far above the main average over here, I'd be looking for shorting opportunities back down over here. So as soon as I saw this making this is a high and this is a lower high, I'd be like, I want to start checking for shorts around this area over here.
But the moving averages, go ahead, chances are
I'm going to be headed back down towards this larger moving average because this is acting like a magnet. These currents act like the price wants to go back towards this current. Price usually oscillates around that current. So think of it like an object on some current in the water. It might move to the left, it might move to the right, but chances are as it moves forward in time, it's going to converge back to the current.
right.
Yeah, you had any questions there?
Well, why are the moving averages going up? Doesn't that signal a change?
So the change here is happening. The moving averages, the currents will move. The quicker the moving average, the more it'll respond to price. So naturally, as soon as the price is moving up, well, this blue one's going to be following the price. But you'll notice that there's a spread. Because of how drastic this move is, there's not enough time to drag this green one up. Right? So this blue one is being dragged up. This guy is being dragged up. But actually, let me change the color of this. This guy's being dragged up. And this one is moving to at a slower rate. And this one is moving to at a slower rate. But because of how sudden the move is, it's not this gradual rise up over time. Chances are the price has to come back down to actually touch the current. You sort of want the longest current, or the longest current that you're dealing with, to be in the direction of the trade that you're looking for. This big one is acting like a magnet. So the price up until now was oscillating. The price up until now was oscillating around this current, right? Up and down and up and down. It's oscillating around it, which means it's been building up energy around that area. So the idea that all of a sudden it's going to skyrocket up basically 90 degrees and go straight up and not stop is not likely. What's likely is that this happens, it comes back down, oscillates a bit, and then if it's really going to continue, you see how this line now is, I'll draw it on this chart here. You see how the slope now is sloping upwards? You see how this current here is sloping upwards now?
Yeah.
Well, now it's saying, okay, as long as the price keeps doing this thing of pushing higher, pushing higher, pushing higher, eventually this guy is going to start turning up. I want to be following it. But during that whole process, the price should oscillate around this area. And so the fact that I went up really high, basically 90 degrees up here, the high likelihood is that we have to come back down, test this, it's called testing this area, test this current, and see if this price now will come back up. Now, we're using this as in a vacuum, right? The currents comes with, the cycles comes with other scripts. So if I were to activate the other ones, you'll see that the different types of, actually, yeah, let me show you that. Actually, I'll show you on a different script. It'll be easier for you to see. So that's the support and resistance levels for LuxAlgo. But let's take a look at these guys. And let's even hide the other ones just to give you an idea. So if you look at these guys, you might think to yourself, well, this is great, right? It's picking out freaking tops, bottoms. What do I need cycles for? I could just use this, right?
What's this? Is this a LuxAlgo script?
This is the LuxAlgo script. This one's called swing highs, swing high lows, and candle patterns. So at the top, it's the two letters are showing if it's a higher high or lower high, higher lower, lower low. And then underneath it says if there's a candle pattern there that suggests that it's bearish or bullish. So for example, this is a hangman candle pattern. This candle pattern here in between these two.
Mm-hmm.
And it's called the hangman is the bearish equivalent of the hammer, blah blah blah, gives me information that says this candle pattern is likely to precede a sell-off, which it did. So you might look at this and go, this is fantastic, Tom, what do I need you? This guy's picking up highs and lows, no problem.
Yep.
Sure. Out of the box, this is what it shows you. And you know, if you were to compare it to, let's say, tides, actually, let's zoom in a little bit more. Should I zoom more or zoom out? Okay. Let's do. Okay, let's compare it to these two peaks, right? So we have a high here and a high tide and a high tide. And remember, the tide script tells you if the price is likely to slow down from here. That's what the tides tell you. Either a high tide or low tide is saying that whatever is going on in this direction, whatever trend you're following is slowing at this point.
Where's the high tide? Where do you see that?
That's over here, where you see the H's. So that'll be
Kind of hard.
here.
Kind of hard to see. So any way to make those H's bigger?
I mean, I could programmatically, I guess.
I mean, I don't know what's normal for traders, but isn't that kind of small?
Well, you don't want it to be, the way that I use it is that you don't want it to be too big, because once you're using all the scripts together, it can get a
Right.
little cluttered.
Right.
And also I have alerts on those things. So it's like when they show up, I get a ping to go take a look at it.
Right.
It's not
All
really made to sit there. So if I were to compare that to these guys, you might be like, Tom, these guys are great. They're showing up. These two red signals showed up exactly where yours showed up, right?
Mm-hmm.
Well, if I were to replay this and go back to the time of that candle and I play it forward, let's take a look. I move forward. There we have my high tide signal that's showing yellow, because the candle is not complete yet. It's saying, hey, it looks like we're slowing here. That's what that H there is saying. It looks like we're slowing here. You'll notice We don't have a signal yet for the other script. Next candle turns red because it confirms. As we move forward, let's watch when that signal shows up.
Oh my God.
After the move is already done.
What?
So this is 21 bars. It takes 21 bars for it to confirm that signal. Same thing if we were to continue.
Isn't that the problem you used to have with version 1 of your script?
Yes. Now, here's the thing. That's adjustable. That sort of thing is adjustable inside of the script. You can adjust the LuxAlgo script and not let it take 21 bars before it confirms the signal. You can say, hey, give me 5 bars. And it'll show the signal in 5 bars.
Okay. Well,
But it'll show way more signals. Let's give it a second.
why not do 1 bar?
Wait, why didn't it show up? Oh, let me show up here. Okay.
I think
So
it was
as I
showing.
lower the, oh,
Yeah.
okay, that's why it's not showing up because it's in the past. Okay, so let's say I did 5 bars. Then I would also get the signal, but I get far more signals. Like you might like this. You might be like, okay, Tom, it shows me a lot more signals, but still, I like where it's giving me those signals, but it's still 5 bars from now. So this signal actually shows up over here. So even though you think to yourself, oh, this is great, it shows up 5 bars later. Now you were just saying, well, why don't you show 1 bar? Well, now you get a mess of signals. You get a mess of signals, and it is catching that signal that it had before, but you're also getting it like basically everywhere. So this is hard to trade, as you might imagine.
Right.
So that's why I like this script, because it's not looking at the candle patterns. It's looking at the momentum of the price. Now I could always make this script be a little bit more verbose. It can add more signals in more places, and I might actually change the features of it so it does that. But right now I wanted to have more signals that were more certain. I wanted to make sure that these levels were to be trusted, because I don't want them just everywhere. I want them when significant moves have been occurring. Because if I'm using, this is the high tide script, I want to know that when the price here falls, and I get an L, I don't know if you can see here, but there's a low tide over here.
Mm-hmm.
I want to know that that's where I should get out. Because even though the price falls a little bit more, you see how it immediately rebounds back up?
Mm-hmm.
And it actually stays around this L level. So here it's telling me, the signal is telling me low tide, and whatever the price happens after that, chances are this is like the low for a little while, until something causes the momentum to pick up, some piece of news, some extra volume, something like that, that makes it so that it can come actually lower down. I love these signals.
Why don't you contact LuxAlgo and tell them how to improve their script?
I mean, they have tons of scripts, and they have good scripts. I'm not trying to poo-poo all their scripts.
Yeah, but their thing doesn't. It's 521 bars.
Well, they know that. I mean, LuxAlgo has.
Why don't you make it more like yours, where it warns
They
you
have
earlier?
tons of scripts. I mean,
Yeah, but why don't they warn you earlier? Where's the
I
script
don't know.
that's like yours?
I never asked them. Maybe they do have scripts that are like mine that I've never seen before. They've never surfaced for me. All right, let's move forward. These are trend lines. So this is the type of script from LuxAlgo where it draws these trends, and then when there's a break of the trend, sort of like the same sort of thing as this one that we saw before, the first one, but instead of horizontal lines, they're diagonal. They're diagonal lines. And this actually works very nicely. Like over here, it warns of a break, and then we get a big drop. Here it shows a break, and it's a run up. Break, run up. So not bad.
Why does it
or
matter if it's
breaking right now.
sideways?
If it's at an angle,
At an angle, I mean, yeah.
it's taken into consideration more than one high. The other one was only looking at one high. This one's looking at two highs.
I see.
So it's trying to detect a trend as early as possible. So this is nice. Doesn't work on every time frame, but it depends how you calibrate it.
Why would you use the other script instead of this one, the horizontal one versus the angled?
It depends on your trading style. Some people, if you're using this guy with some other scripts, it might be giving you some useful trades. I don't know. There's just a different style to see. Okay, does this work for you? One of the downsides I find with these guys is that I'm not the kind of person who wants to trade a trend after it's done already. I don't want to signal here after most of the trend is done. I don't really like that. I don't want this signal.
Yeah.
I want the signal as low as possible. Because otherwise, depending on what you're trading and what your commissions are, you can be chewed up. If you were to take every one of these trades, you'd be chewed up in fees. Even though you would make some profit, you'd pay a buttload in commission costs. So it's sort of like, well, you don't necessarily know which one of these trades will move enough in your direction to make the 5 other ones that didn't pay out that much or failed worthwhile. That's one of the downsides. You can have a signal that's like 80% accurate, but when you actually check to see, well, how much money would I have made? Well, because it didn't run up that much on your commission costs, you're actually losing money over the entire trade. Or to put it in a different way, if this type of trading worked, generally netted you a profit, well, someone would just turn this into a strategy and then run a money printing machine.
Right.
All these indicators have this sort of idea embedded inside of it that there are flaws to them, or else they would be money printing machines.
And is there flaws? Are there flaws in yours?
Well, I'm still learning how to use all the scripts together, right? All my scripts together are they help you with your trading strategy, but they're not a strategy in and of themselves. They're just indicators. So I am planning on making it a strategy that'll make this all a little bit more hand-holdy. I do want automated strategies that can work, but I'm far more of a long-term trader. I much more prefer options. There are other types of trades that I think are more practical for people to make. This sort of day trading, it takes a certain type of temperament for it. Also with the strategies, when you have automated strategies like that, you need them to account for different types of circumstances. So it needs to work in a bearish environment, a bullish environment, a neutral environment. It needs to work if there's a sudden news that occurs. It needs to work over nights and weekends. There's all kinds of things it needs to account for. And so that's what makes it very difficult. You can have 10 good trades in a row, and then one trade can screw you.
Right.
So so when I compare to things like this, where you're trying to, it's giving you multiple different signals, and you never necessarily know which ones are going to be in your favor or significant enough. I much prefer things like flow, and that give me information about the trends. Actually, let's go with this. So over here, this signal is telling me that a bounce is incoming, which is to say that the amount of liquidity within the system, the amount of dollars flowing into the system, has increased, and to consider going for a long trade. Now, someone might be scared by this drop here, but since this bounce, this flow indicator is telling me that the number of dollars has increased, this is actually, even if I got into the position over here, you should not be shaken out of the position at this down here. In fact, it often happens that you get a move in the opposite direction of where the price is actually going right before the price goes in that direction.
Right.
It's market manipulation that's occurring. So over here, this bounce, if you were to take it, you would then have been able to ride this right up, right? This 19% move, which I much prefer over this sort of thing. trade, 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 trade. Because here, I might have put in a position to short the short, right? Here I would have put a position into short. But what did you do here at this signal? If you shorted again, then you would have stopped out, let's say somewhere around there, and you would have lost a quarter to half your profit, right?
Yeah.
If you bought this breakout, this can work, but this breakout went nowhere. This breakout went nowhere or barely anywhere. And only this one at the end over here actually succeeded. So instead of being in over here and not knowing how far it might go, I like to know that this guy is telling me that I should be expecting a run up in this asset. Now, you can use this in conjunction with the trend lines, right? You might say, okay, when I see these guys, when I see this bounce, fade, don't take any of the short positions, only take the long positions, or take the first long position that the signal gives me. And then I would have gotten over here, which would have been an even better price than over here. Great. But just looking at price is not enough. You need to know the underlying mechanics. You need to know how much money is flowing into the system in order to really catch a trend. So this would have helped me catch this trend over here. Over here, this flow signal, it could have prepared me and said, hey, the number of dollars flowing into the system has increased even more. So then I might have now taken the next breakout and expected this to go up a lot, which it did.
Right. But where's the signal going down from that peak?
So the signal over here, I think Tides gave us that. Yeah, so Tides gave us that we had a high signal that says, hey, this move, it's slowing down. Get out of the trade or reduce your position. And then it fell from here.
Wow.
So this signal I much prefer over this guy, which is after it's already done. Now let me catch this, and this even comes back up halfway. So like, when do you get out of that position? Whereas this guy, you can write it all the way down, get confirmed with a break, and then sell it off anywhere over here and still made this entire profit.
I don't understand. I don't understand how people are trading with these other signals. It seems so much harder.
Well, when you trade only price, you have to understand the markets used to be very different. It used to be a trader's market. I mean, when I say used to be, that's the 80s, but that mentality is still there, where it used to be the technical analysis was the new kid on the block. Where if you knew technical analysis while everyone else was chasing stuff, headlines in newspapers and things on the TV, on the radio, well, then you had a head start because people weren't analyzing charts. But now you have program trading, you have quantitative trading, you have technical analysis that's ubiquitous. Now you're trading with other people exactly like you. And so you don't have the edge there. But there's still that idea, this need to use these types, because it makes you feel like you're seeing something that someone else is not seeing. Or they don't have the indicators that I have, right? So they're not seeing the exact same thing. And not to say you can't make money that way, but it is a different type of challenge that wasn't there before when people didn't have all these charts. What I like to say though is that the reason why, you might say, Tom, there's thousands of indicators out there. LuxAlgo seems to have 500,000 that are on TradingView. Why are you creating any more? Well, it's because I'm trying to focus on the new kid on the block, which is the flow of dollars, right? The flow of dollars within the system is one of the leading factors for how an asset actually moves. And I was tired of not having a suite of indicators that cater to that. I want that information there. I mean, it's not as far as I wanted to go, but that's fine. We're at the beginning. I'm going to make them better. But stuff that allows me to see what the long-term trend is, I think because of the flow of dollars, is invaluable. And when I add these with other indicators, well, then it becomes that much more useful. Helps filter out a bunch of signals that I don't need to be using, because the flow of dollars within the system is really now the driver of prices of assets for many assets.
This is a global liquidity.
Liquidity, exactly. Well, there's liquidity and positioning. We haven't talked about positioning in our last videos. I'm going to be having a suite of indicators come out that are going to be catering to positioning, which is to say, where are the retail investors? Where are the institutional and commercial investors?
Mhm.
Where are the sovereign entities? Like, where are the different players positioned? And then helping to make trades accordingly. That's super useful for currencies. It's super useful for bonds. It's a different type of trading. But what I'm saying is that I like to focus on the underlying mechanics, the underlying dynamics of how the financial markets work now, because it really changed drastically in 2008, 2009, all the way up to 2011, when the global financial crisis occurred. Basically, the entire system reset, and it's been a different dynamic ever since. So if you use the same rules that you had during the dot-com crisis, dot-com, or the 80s or what have you, well, you're not getting the same type of success.
Cool.
All right. I'll do one last one. We'll save the smart money concepts for a different video. These are order blocks. We've talked a little bit about these before. So let's take a look at today's trading period. Okay. So these order blocks are trying to say that there's volume, there's transactions that are happening in this area, and so there should be it's either support or resistance. So over here, this blue area is saying, well, you should expect the price to bounce in this area. And it does, right? It bounces once over here, and then peters out and then breaks. And then the idea here is that these boxes afterwards, these red ones, are resistance areas. So now when the price goes back up to this area, it hits and falls. Totally understand. Totally get it. Even here, it's showing that this is a bullish blue area, and the price comes up, bounces a little bit, and falls. My issue with the order blocks is that there's no end to these order blocks, Peter. Like, there's nothing that tells you, like, just because this is a big area doesn't mean that the order block is strong. Like, it doesn't give you that information. If I were to replay this chart and start playing it, there's tons of order blocks. Now, you tell me if you're seeing any sort of indication here. So right now the price is inside of an order block. It moved out of it and went up. Why? Because that order block, this green order block was a sell zone. Now it's going up. It's bouncing off this order block over here. So the idea is that it's going to come back up to this area. I might come back down. But there's tons of order blocks around. Some of them are held and some of them are not. And some of them break and some of them don't. And I find this to be, on its own, very difficult to trade. You don't know how long a price is going to stay in that order block. You don't get a sense of how many orders are there. Nothing. Let's move this a little faster, as you can see. So if you were to use this to trade, you don't necessarily know if that order block will hold or not, or which ones you should be following. Right? Does that make sense?
Makes sense.
It does seem to, after the price has moved past an order block or through an order block or bounced off of it, then it seems obvious. But until much of the move is done, you can't really tell. This is why I like, but if I were to join this with my indicators, let's turn all of them on. You'll see here that here we have a high signal. So saying the price is slowing down, right? So even though it's saying the price is slowing down, so even though it moved past it, expect it to come back. Expect it to come back where? Oh, come back to this order block area. Okay, great. So I have an expectation that when the price breaks out of this area, it will come back to it, which it did. You can also see the currents in the background. Here, if you treat the currents as, let me get rid of the chart. If you treat the currents as its own price, so here it's revisiting, here it's bouncing, you can use the currents, like you can just get rid of the candles and just trade the currents if you needed to. So here, as we see that the currents have broken back in, all of them have broken back over here, chances are this order block is done for. I don't have to wait for the price to fall out of this order block over here. before I consider that this order block is weak, because all the currents came back into it. All the currents that passed out of it, these two that passed out of it, the purple and the blue, they came, well, purple, blue, green, yellow, all these different currents, they all came back into the order block.
And
so that suggests that this order block is now weak and that it's likely to break.
well, if you didn't have the order block, what determination could you make?
For the short,
For once you get your signal that lets you know it's going to come back down, it's a fake out breakout, then how do you know it's going to consolidate back down?
well, you don't know that it's going to consolidate, right? When you're making your trade, you're taking a bet that says I'm willing to risk 2% in order to make 4%. And so you take the trade, and then if it succeeds, it succeeds. If it doesn't, it doesn't. It's just that you want to you want the probabilities to be in your favor that whatever trend you're banking on will succeed. So for example, let's say I got into this trade over here. And this now I did a short over here. Well, this went up, and I would have failed that trade. The trade would have ended. I would have lost money on that trade. But then the question is, it moved up, and if I like the trade before here, I might still like the trade over here. So I might wait for the price to come down, bounce off the current, come back up, and once it showed this lower high, then it's like, okay, this energy that it took from this current petered out before it broke to a new high. So around over here, now I could short again. Because this guy told me things are slowing down. So chances are I'm going to come back to this level sometime. I'm going to get back to this level, which is what happened. Just like over here before, when I said here, this is a low, the price came down to a low. So chances are we're not going much lower than that.
Right.
Or we saw one previously. Anyways, the idea is that the price can move past the tides a little bit, but chances are it's going to come back. I also talked at the beginning here that this idea that this current is calling the price back down to retest it, because this went up too suddenly, as confirmed by this high tide. So there's multiple areas over here where I might retry to short again. And if I were to short around this area as I get the lower high, well, then I could ride this very casually down, because I'd be in profit the entire way. Let's say I was too worried about this guy. So then I wait till it breaks over here. I wait till it revisits the current, comes back out, and over here, it's meeting resistance at my current, and that purple current, it came back down over here. Maybe I could short over here. Oh, it broke out and came back down. There's a resistance on this current. Maybe I could short over here. Oh, the current over here. Now all the currents came back down below this this one over here. Look for shorts underneath. Oh, I bounced off the current down over here, and it came out. How much energy do I have? Oh, I only had enough energy to get over here. Short again. So my indicators are giving me multiple opportunities to get into positions for the trend, for the current move, all the way down to I get over here where it says, okay, it looks like we're done, and now it's gonna head back up. So chances are this price will keep coming back up to this level, and because our flow is still shown in green, then it'll at some point come back up over here to retest this level that we're at before, do something, and then break out. So this guy's telling me, this flow is telling me, look, we're still in a long position. This was just to day trade. But while we are, even though we're day trading, if I were going to zoom out to the daily chart, we're still in flow territory. Even if this price came all the way back down over here, the expectation is that we should be going up, just like it was over here. The expectation is that we're going to go up. Even though we fell down over here, nothing undid the flow, so we should still be going up.
Pretty cool, Tom.
Yeah.
I like
So
it.
that's just a quick overview of an overview of the indicators for cycles and how it compares to LuxAlgo. I'll take your credit card now if you want to swipe it. It's only $180 per year, and you can go to sacredprofit.com right now in order to get your bundle.
And do these cycle indicators work well with LuxAlgo indicators or
With
others?
some of them, actually, I mean, they what I like about my cycles is that they're not like the a lot of the other indicators that I've seen where they're trying to give you buy and sell signals, right? I'm not nothing I've shown you so far is about giving you buy and sell signals. They're all about trying to tell you what is the flow of dollars within the system, what's the momentum, what's going on. It's really trying to give you the sense of you're flowing down this river. Then you have your own techniques of you know, what kind of boat you're using, right? What are you in a kayak? Are you in a canoe? Are you in an arc? Whatever it is, and then you use your own strengths in order to decide how you want to trade. So, cycles works great as a base if you want to day trade or swing trade, and then you overlay your own indicators on top of there, and then you use cycles in order to filter out bad signals. Of course, cycles works best over longer time frames, right? Over weeks, over months, over quarters. Well, then you're really going to get signals that are significant. Like you can really treat them like buy and sell signals.
Very cool, Tom. I really like it. I'm just gonna say I'm unbiased when I say I think your cycles is way better than LuxAlgo. I have no vested interest in you. Don't care. Don't even know you. First time I'm meeting you.
We've never even met. Yeah.
Never even met before. But I can tell that your cycles is better. But anyway, just looking at it, it definitely does look better. I like the earlier indicators. That to me seems like a big deal. And I do like that you talked more about currents and flows and talk about liquidity, because as far as I understand the markets, liquidity is the whole shebang. And I never really thought about it in terms of a paradigm shift since the 2008 financial crisis. But I guess is it because the Fed or whatever is just pumping dollars in, quantitative easing for years? Is that why the system now has changed over to liquidity and it's no longer what it was before?
Not exactly. The long and short of it is that since the global financial crisis, the world has been very short of dollars. Actually, if you wouldn't mind, I'll just pull this up real quick. I was just posting information about this today.
And your Twitter?
No, on TradingView. I publish on TradingView almost every day if I have something to say. So this is the US dollar. And the US dollar basically since 2008 has been in a structural bull market, just up and to the right. Now there's large oscillations that happen, big fluctuations that correspond when there's quantitative easing, when there's good, so the dollar goes up when there's bad times and it goes down when there's good times, as far as the financial markets are concerned. But it's been structurally up and to the right. Why? Because the amount of debt within the system. So if we take a look a little bit down over here, you'll see here that I spoke about how the debt to GDP ratio of the world has been increasing. It's been increasing over time. So that means when the debt increases, sovereign nations need to get dollars in order to service that debt, right? They have to pay interest on the money that was lent to them. And so as they keep borrowing, their interest gets higher and higher and higher, and they need more dollars in order to pay it. Does that make sense?
Yes.
Yeah. So as they need more and more dollars, they to pay it, they have to issue more and more debt. So you have this whole cycle where that's an upward pressure on the dollar. Total bank credit versus the balance sheet. This is the idea here that the amount of credit that's being issued into the system by the banks. Now, if you just look at a regular chart of bank credit, it would go up and to the right. But when you actually divide that by the Fed's balance sheet, what you get is this idea that the amount of credit that's being created is not being offset by the devaluation of the dollar that happens through the debasement of the currency. In other words, the dollar is being worth less and less and less over time. And so the amount of credit you're getting is not offsetting that. Right. I think I've used an example with you before with like, in the 1970s, you might have been able to buy a house for $50,000. And that same house, you could sell it today for $10 million. Right.
Right.
Well, that house is still worth one house. That means that $10 million that someone's paying today for that house is just buying one house. In the same way that if you buy a milkshake today for $8 and it used to cost you a nickel, your purchasing power for your dollars have gone down. That means if you saved $8 from the 1950s and you were to spend that $8 today, you'd be able to buy less. Just like if you saved that $50,000 for that home in the 1980s and you were to spend that $50,000 today, you couldn't buy what you could buy before. So even though credit is being issued at different degrees within the economy, the dollars that are being created are worth less and less over time. So that causes more dollar pressure. And
So
then finally,
spend now is what you're saying.
well, that's the idea, right? The whole economy right now is based on spending. It's on a consumer economy. And the less people consume, the less dollars are flowing around, the less credit gets created, and the worse the system gets. That's why I think Bush sent out checks to people in order to help stimulate the economy, because they're like, you have to spend money. If you don't spend the money, then the whole cycle doesn't work. The whole Ponzi scheme doesn't work.
Right.
And then the final item here is here I'm just using U.S. labor productivity rates, but it's the same throughout the world. If we're to take the G7 or the Western countries, whatever, the level of productivity, which is to say the amount of productivity you get per unit of effort, so what you output per unit of effort has been decreasing, and has been decreasing since basically the dot-com bubble. We're getting an uptick, a little bit of uptick right now. Who knows what that means? Is that AI? Is that software? Who knows? Was that just a bump from the pandemic, right? There was a bump up in productivity. Who knows? But overall, structurally, it's been decreasing. And so if productivity is decreasing, that makes the ability to service the debt from the debt to GDP harder and harder, because you need more and more. The only reason to take on debt is so that you can be more productive, right?
Right.
If you take on debt in order to be more productive, that means you could pay back your debt and you have money left over. That's the only reason to do it. You're aiming for productivity. But if you can't get that productivity, well, then you just have the interest payments, which you can only pay by taking on more debt, and you have this vicious cycle. Anyway, so just the idea here that the world has been structurally short dollars, and so what do you do if you have money, if you have $10 million and you need to put, if you just kept it as $10 million, it's going to go down in value. And so you have to put your money somewhere in order to store it, to safeguard it, right? All the assets that people buy, all the financial assets that people buy, is so that you can get a claim on dollars in the future, that asset that you can sell it in the future in order to get dollars. And so people put it into financial markets, such as in bonds and equities and what have you. And so as that money gets into into equities or crypto or what have you, the debasement occurs, right? They're printing more dollars, or more credit gets created, or whatever. Then the nominal value of your asset goes up. That's why the stock market goes up and to the right. That's why your house goes up and to the right, because it's still worth one house, but the currency is being worth less and less and less. So you need more of that currency in order to buy it. And so the financial markets become, as dollars are created, it becomes one of the first places where dollars go. And one of the first places where dollars go, they get to go there before the debasement really permeates the economy. So it's sort of like they get the equity markets get the advantage of the Ponzi scheme, because the dollars go there first in order to buy it, pushes up the price before that information gets registered throughout the economy. But you know what works even better than the S&P or the stock market? Crypto. And so crypto gets it even sooner, because it's a global system, and wherever credit is happening, there's a certain percentage that's going over there. The number of sellers for the crypto is less than the buyers overall, and so you have this price momentum up. As the performance increases, then people say this is a place where I could put in money in order to get a claim of dollars in the future. And since I'm getting 20% on Bitcoin versus 2% on the on some stock in the S&P, well, I'm going to go with Bitcoin. So it's this self-perpetuating system. That's why when they go, oh, Bitcoin is a Ponzi scheme, I go, great, yes, it's actually a Ponzi scheme square on top of the Ponzi scheme that we're already working. And the reason why it's working so well is because of how liquid it is. Anyways, I'm boring you with this information. Suffice to say that
You really caught me with that. Bitcoin is a Ponzi scheme business.
Well, it is. It is a Ponzi scheme.
How's it a Ponzi scheme?
Well, a Ponzi scheme is where you get paid out when new money comes in order to pay you out. Right? There's no
but it's also the asset has to
Bitcoin.
There's no inherent value to Bitcoin. The inherent
in and
value
of itself, it's not
to service.
on its
It's
own.
a service currency.
Right, and the service only works insofar as there's other people who want to buy that service.
Well, that's just the nature of currency, of money.
Well, if you bought a house and you lived in the house and you wanted to sell that house, but no one wanted to buy the house, you would still have one house that you can use. It's useful in and of itself, even if no one wanted to buy it. You might have bought it because you wanted to flip it, but if you or to sell it, but you can't sell it, you can still at least live in the house. You can use it. But financial instruments, I mean, I'm saying this for Bitcoin. Same is true for any stock that you buy that you don't get voting rights and you don't get dividends, or you don't get preferred voting rights, whatever. Let's say just the dividends. If you don't get any dividends from the stock, why are you buying that stock? Why ever buy a stock that doesn't offer dividends? Return of revenue to the shareholder. Well, the only reason to buy it is that you believe someone will buy it from you at a higher price later on. Otherwise, what's the point? There's literally no point to buy. I remember scratching my head when I first started trading. I was like, why would I buy? Why are people buying stocks that don't provide a dividend? I was like, what? Isn't the whole point is that you own a bunch of stocks and then you can get paid, you get to retire because you're getting dividend payments. You can get your 4%, 7%, 11% per year or whatever it is and maintain your lifestyle. Isn't that the whole point? I have to sell the stock in order to get to recoup the money. It's like, yeah, it turns out that because of the dollar pressures throughout the world, they don't have to pay you a dividend. They know that you could buy the stock, or depending on what the stock is, they know you have to buy it because they know it's a claim on stocks in the future. Why do companies bother buying back their stock? Right? Why not just, if you have money in order to buy back the stock, why not just issue that money to the shareholder, let them get a dividend?
They're trying to increase the value of the stock.
Yeah, they try
make
to
it more desirable.
Exactly. How's that not a Ponzi scheme? How's that not like there's 10 houses on the street, let me burn 2 down so that the other 8 sell for more? I don't understand how that's any different. And so
that's a good idea.
It's a Ponzi scheme. So Bitcoin is technically, cryptocurrencies are technically a Ponzi scheme unless the cryptocurrency actually does something else that's useful in and of itself. It is a Ponzi scheme, and it's just that this Ponzi scheme has a more immediate, closer access to liquidity somehow, for some reason. I don't exactly know the reason why. I think it's because it's a global network, and the performance of the asset sort of perpetuates itself. But because of that, it makes it the asset moves even further. So to me, indicators that are not taking that into consideration, it's like, what are you doing here? I don't care about your break of structure. I don't care about, beat the most recent high. What does that even mean? Who cares? I want to understand, where are the dollars flowing within the system and how do I take advantage of it? And that's what Cycle does.
Zing. All right. I like it.
All right.
Well
done. So we'll leave it there. And I'll see you. We like to stream every hour on the hour for about half an hour. So we'll see you at the next hour for the next half an hour of the Profit Daily. I'm your host, John Daly.
Yeah, you can do that. I'll see you Sunday.
All right, man. Thanks.
All right. Cool. Thank you.